Well, good afternoon. This is Mr. Not Advice. It is Monday, August 10th, 2026. This is my end of the day update, as always, for education and entertainment purposes only. So we had the back and forth now in Iran and the U.S., with now Iran saying they are not going to do anything and negotiate anything, and they're not going to open the strait until after midterm elections or even after Trump is out of office, which saw then Trump to respond with some ridiculous remuneration comments that Iran owes the rest of the world for 50 years of being a terrorist nation. So, on the back of that, oil was up, although not up as much as you might think. It's been steadily up over this past 3 to 4 days. The market was very, very light today. Let's look at some charts. As you can see, oil today hit above the 50-day moving average. And what's even more concerning is the fact that the crack spread is also starting to rise on, or not the crack spread, refined products are also starting to go back up. We've got European natural gas futures now surged as much as 11.7%. But the big story, which I have not mentioned yet, this will be the first time, is the U.S. Strategic Petroleum Reserve. So looking at the SPR, we are now at the lowest levels since 1983. However, why I'm mentioning this is that generally accepted belief is that the operational minimum for oil in the SPR, which is the point, think about how low the tanks are, where it becomes mechanically much more difficult to pump oil from it, is somewhere between 250 million and 300 million barrels. In other words, if the US is not already at the operational minimum, it will certainly hit that in a few weeks, which is probably why, according to unconfirmed reports, as I mentioned, Iran has completely ruled out any future negotiations with the Trump administration, and it will wait out Trump's term until January 20th, 2029, which is why the poly market Strait of Hormuz traffic returning to normal by August 31st odds dropped to 3% today. So something to keep an eye on. Could cause a swift rise in the price of oil. And I actually will be looking at any oil names to perhaps be getting long, and I'll show you why here. It was a quiet start to the week with exchange volumes tracking minus 12% versus the 5-day moving average. And they're pretty much a muted move at the index level. We do have CPI and PPI and retail sales prominent, and that will be reporting. So what we're going to see on the VIX call structure is, as I said, the VIX will start moving up seasonally through the end of October to the mid-November. Activity levels were a 2 out of 10 today, according to Goldman's trading desk, skewed very slightly for sale. Asset managers just skewed better sellers, led by selling in macro, communication services, consumer staples, and financials. Hedge funds were slightly better to buy on light notional volume, led by demand in macro, communication services, and financials, versus selling in infotech, industrials, and consumer discretionary. Futures drifted higher in the overnight and then got hit by NVIDIA, which disclosed more circular financing deals. A group of U.S. investment giants are nearing a partnership with NVIDIA on a $500 billion funding for the build out of AI infrastructure. As Zero Hedge posted today, their comment was more circle jerk financing to make up for lack of free cash flow. Indeed, Bloomberg then admitted after that tweet, NVIDIA has already inked hundreds of billions of dollars worth of deals with companies across the AI ecosystem, which is stoking concerns from some investors that the chip making giant is inflating demand and valuations across the industry through the circular nature of such agreements. That happened to weigh on US mega caps as well as hyperscalers, drag the entire market lower, though not dramatically so, with small caps the day's biggest loser, followed by the Nasdaq. There was some late day lipstick put on the pig, which managed to get the S&P 500 back to unchanged, almost perfectly unchanged, by the way. Additional chart here. This is the most shorted. It appears that the short squeeze is running out of ammunition. Looking at the AI ecosystem, software infrastructure and platforms outperforming while optical networking tumbled, which would also make sense with optical networking being at the front end of the manufacturing supply chain. I will be looking to get long IGB tomorrow if I can get a trade that works. Leaders were continued strength, by the way, in software. Defense and oil names have also been well bid, even though no formal deal over the weekend from US and Iran. However, the laggards have been travel and leisure and home builders, which are dropping on the back of oil and rates moving higher. Bloomberg Dollar Index was up strongly today, with the dollar rallying back to erase all of Friday's payroll plunge. Despite last week's big ETF inflows into Bitcoin, Bitcoin was, as Zero Hedge would put it, a club like a baby seal today. One interesting note that's coming out of Goldman Sachs is this chart here. It appears the smart money has been quietly selling the Nasdaq. This is coming from Goldman's flows guru, Lee Coppersmith, who stated that Nasdaq futures exposure swung from a plus 9.9 billion position to minus 11.1 billion last week, both the largest weekly decline and the most bearish reading since ChatGPT launched in 2022. Simply put, as the index tagged record highs, professional positioning in Nasdaq futures went to its most bearish level of the entire AI level. Furthermore, Cooper Smith frames it as such. The market may be re-risking at the index level, but beneath the surface, investor skepticism and measures of exposure to tech are shifting dramatically. Translation: the market that supposedly can't stop going up has, if you strip out AI names, been carried by everything except AI. We want to look at a comparison to the 2021, in late 2021, the SPX broke out of a multi-month sideways trading range. However, that late 2021 analog is interesting because the SPX breakout occurred as high beta momentum was already in a 25% drawdown, similar to what we are seeing right now. Commentary is that this recent breakout also is likely to falter. In addition, the 6-month long short momentum indicator now sports a declining 200-day moving average. This is because many of the 6-month losers, software, have ripped while the 6-month winners have suffered. As momentum sold off in July, the S&P Equal Weight Index, the RSP, clearly benefited. Since the momentum low, the RSP has pushed higher yet again. But the question is, how much juice is there left to squeeze in the blue line here? If it rallied during the unwind and again on the rebound, the sense is that a lot of buying has been done and risk of an air pocket is now much higher for the RSP. As an example, looking at the European markets, which are up 11% year to date, the trend remains strong, but now it is hitting the upper end of a very strong 4-year channel. This also means that it is vulnerable to some tactical pullback. Despite a negative headline for non-farm payrolls print on Friday, the 10-year real rates aren't pulling back much, and they remain near multi-year highs. Again, higher rates, not good for the stock market. Getting to gold. Gold is rallying straight into resistance, which is in the 4,400 to 4,500 ounce per ounce zone, which was some prior support. The 200-day moving average is about to turn and start inflecting lower, and the downtrend from all-time highs could continue. So I think the market is very fragile right now. I don't know what it will take to perhaps scare the market into another pocket of selling. I actually am expecting another pocket of selling. And that's based on the opinion coming out of not only Goldman, but Bank of America, BTIG. There are a number of big firms that have been mentioning and been relaying that to their clients that there needs to be caution and not to chase this. Look, this was a pathetically quiet day today with only a 2 out of 10, as I said, in terms of activity level. Our stocks today, really not a hell of a lot of movement today. Sideways movement in EOSE today, as well as PCT was able to close slightly higher, slightly green by 4 pennies. But look at the sideways action here. Really not anything to write home about at this point. Intel also came out today offering new shares, and that's why it went down. Nvidia, again, coming back down. It could test this 214 level, and that depends if investors decide that if they won't, by the way, but what I was going to say is if investors decide that they're now significantly concerned enough about the circle jerk financing and revenue agreements that they have in place with their so-called customers. So, what does that mean? I think we could test this breakout level. I'd like to get long NVIDIA if we can test out that breakout level and we are to bounce higher. For a overly quiet day today, as I said, we have oil moving, breaking out of this resistance level. We do need to get above this 82.29, and at that point, I will look to get long. It'll be through either a oil ETF or through a major oil producer ETF. Other than that, very quiet day today in the markets. I'm looking to get long a couple of trades for tomorrow, but at the same time, pleased to announce that my long-awaited book that seems to have taken longer than Grand Theft Auto's newest release, which we're waiting on years on. I'm hoping that my book and workbook will be out starting next week for purchase. So I hope you're doing well. Please continue to send me questions or comments relative to any stocks or companies you want me and the other two stooges to take a look at. And I will see all of you in the boardroom tomorrow.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping.